Welcome back to Around the Table with Stacy Smith. We're taking a look at the economy and especially investing. And as we mentioned, there are winners and losers in this economy. In fact, if you take a look at the U.S. economy, it seems resilient and somewhat resistant to interest rates. But it's not limited to the U.S. The global economy is doing much better than anticipated, especially in Europe. So, Carrie, should one look at funds that focus on European or foreign companies?
Well, we always want to consider what's going on around the world. But, way back, the idea of owning international made sense because the US and in Europe, for example, there wasn't a lot of correlation. And now that we live in a much more globalized economy, we do tend to see US and Europe in particular move in sync with one another. So you're not quite getting the diversification that you need. What's going on in Europe right now is somewhat mirroring what's going on here in the US, but the risks are greater. Last week, we had some inflation data out of Europe that was higher than expected. I actually think that the inflation situation in Europe will stay higher longer than it will in the US. We also have to look geographically at, the fact that Europe is very close to the Ukraine and the impact that the war, even from obviously an energy perspective, has had on the inflation rate in Europe is significant. So, we're not really proponents of international. We haven't been for a couple of decades, quite frankly. We just haven't seen the value. We still feel that here in the US, there are a lot of opportunities and a lot more opportunities to come. The pushback that I always get from people on international is, well, valuations, they're cheaper. These stocks are cheaper. And, I often say, yeah, they're cheaper for a reason, and they can stay cheap for a long time. So, we're constantly looking to see if there are points that we may want to re-enter the European market. And quite frankly, that will probably come at a point where we start to really see the dollar weaken, and that could be a topic for another show. But, we're not real anxious to be jumping in internationally.
We're invested internationally all the time. The question is how much. And Carrie's right. Much more so, the world is locked together. But there are times when they do work in a co-varying way. But put that aside for a moment. It just broadens the opportunities. If I say Nestle, Hershey's, you think they're both big companies. Well, one is international and one is domestic. If I say Bayer or Merck, one is international, one is domestic. We just have more opportunities to invest. So we always have some international. We don't treat it as a homogeneous category.
Another thing that you have to consider is that the international markets are quite a lot different than the U.S. markets. We have very large corporations. Europe does not. I mean, you talk about Bayer, they're a large company, but compared to some of these trillion-dollar and multi-hundred-billion-dollar cap companies that we have in our country, they don't have a lot of that. Siemens is a big company, but it's not General Electric. So you're dealing in a smaller playing field. In this morning's Wall Street Journal, in fact, there was a chart of market caps comparing the United States against 4 countries: the United Kingdom, France, Italy, and Germany. And they combined represent about 10% of what our U.S. market is in market cap alone. So the lack of opportunity there, I'm not sure that's the case, especially with a strong dollar. All right, because you can buy a lot of euros today with a dollar, whereas on the end of this cycle, maybe that won't be true, and you'll get a lot of dollars for your euro at that point. So I actually think there's a little bit of opportunity, but I put all my money there under no circumstances. I'd put a piece, wouldn't be bad from my point of view.
Right. Let me use the auto industry as an example. To use your point of view, we would buy only US-based auto companies. That means we wouldn't buy Mercedes, we wouldn't buy BMW, we wouldn't buy Toyota. I think we need to look at the world for the best opportunities.
I agree about looking at the world, but maybe you want to do it through US companies. For example, IBM has 60% of their revenues from outside of North America, which is pretty much America because Canada, it's small. Anyhow, just saying that, there you can get a lot of exposure. But back on when you're looking for areas to invest in the world, just because an area is cheap doesn't mean that it's going to come back up to some other level. You have to look at the drivers. So Europe has a declining population. It has much more stringent rules about all manner of things just in running a company. And those are factors which have led to these lower valuations because the companies just can't be as profitable as US ones for regulatory and other reasons. So you really have to do your homework. I guess I'm the homework person today. You really have to do your homework on what the underlying factors are in that geography.
I'm glad I'm not
Oh.
taking a class with you, Kim, because I'd be doing homework all the time. I mean, you'd
Yep.
be signing it. We have to take a break. We'll be back in just a moment.